All right. Good evening, good morning, good afternoon, wherever you are on this beautiful planet. Welcome to the Inner Circle Live Asian session. I'm your host for tonight's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage. And definitely happy and grateful for all of you being here with us as we take a look at the technicals and the fundamentals to see what we could take advantage of in the Forex market. So, without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper, take lots of notes. And as always, let's make sure that we participate and engage. So if everybody can hear me loud and clear, please do me a huge favor. Drop me a big one in the chat and we can get this session going. All right, chat's active. All right. Sorry for the late log and a couple technical issues, but I think we are all good now. So we are all set. So let me log out of here and we can get to work and get down to business for tonight's session. So first things first, okay? On the home front, Australia came through. They were expected to raise the rates by 25 basis points. Instead, they decided to hold rates. So you can see it came in actual 4.10, which is the same as the previous. The forecast was 4.35%. They were expecting 25 basis points. They held, right? This market is amazing. Fundamentals do matter. So we'll take a look at a couple of the Aussie pairs. We had put the one setup in the Discord. We actually had a lot of them marked up to put, but we only settled on the one because we didn't want to go, we didn't want to over index on the Aussies and then that rate hike went the other way. But we made out pretty good on the one that we did post. So can't be greedy in the markets. So yeah. So let me see. I hate to say I may leave early. Eyes are heavy and they may win the battle. Hey Joy, well hang in there as long as you can. Always glad you're here. All right. So ISM manufacturing came through today for the United States, showing some contraction, right? Slightly down. 46.9 was the projected. Came through at 46.4, so came in just below forecast. Jolt's job openings came in kind of right on target, kind of flat for jobs openings. So, and then the ISM manufacturing prices creeped down a little bit here in the United States. So, moving on over to New Zealand, where we actually saw the employment rate, right, come in over missed forecast. So creeped up a little bit, the unemployment rate to 3.6%. Employment change came in at 1%. So a little mixed data there for New Zealand. So we see here, right here in the headline, New Zealand jobless rate rises, wage inflation may have peaked, right? So we know, like, for example, here in the United States, wage inflation is a big issue, still sticky when it comes to wages. Same thing going on over in the UK, especially in that London area. Wages are rising, but we have to remember though, right? A lot of that comes from also coming out of that pandemic, having to get people back to work and everything, right? Those wages increased a significant amount, so that is playing a huge role in sticky inflation. So we'll continue to watch out for that. So moving into Wednesday the 2nd, of course, right? It is non-farm payroll week for the United States. And we've got the precursor to that private job sector, ADP non-farm employment change coming out at 8:15 tomorrow. We'll see if it'll move the market. The forecast is 191K. Previous was 497. So we'll see where that comes out. And we know we've got inventories tomorrow. That's not highlighted as a red folder, but we want to watch it because we know those oil prices have been steadily increasing, right? Because we know, especially if you read the newsletter that we put out every week, we have, right, supply cuts. Okay, supply cuts are an issue. And so we see those oil prices going up. We know here in the States, the gas prices are going up. So yeah, Joy, you're riding that longest. Hey, technicals matching the fundamentals, right? It's kind of been in a big range, but you got buy side at a low price and it's paying off. All right, so we'll continue to see what's going to happen with that. So before we know, coming into the year, there was a hedge fund. We had posted that a while ago. A guy that ran a hedge fund and lost a whole lot of money because he was banking on the oil prices increasing. He was betting on oil, and the Chinese economy didn't take off like he thought. Like a lot of people thought. He wasn't the only one, but he got stung on that. But you can see that price is increasing now. So sometimes, right, everybody, you could be right, but it might be the wrong time, which is why we use proper risk management and we don't over leverage. So that way we don't lose billions of dollars, because it's looking like he might have had the right idea, but he had bad timing. And if you're over leveraged, it will kill your account. So just a word to the wise, right? I don't know if you guys remember that when we posted that article in the Discord. Lost a ton of money, put it all on oil. All right. So that's cool, but you just don't want to be over leveraged. Paid the price for that. So we get upset when we might lose a few dollars on a trade and then open our computers back up and it actually went our way. Try doing that on a scale like that to where you can lose billions of dollars. That's messed up. But so that's it. What's going on for tomorrow? We got some trade balance numbers coming through for Australia. That'll be interesting to see. And then China, we got services PMI coming through. So we'll see what happens there. And that is, let me see, we go over to the trading economics, and we see that Fitch downgrades the U.S. credit rating to AA+ from AAA. So our credit rating just got lowered here in the United States. Why? Let's see. We always say we're in this together whether we like it or not. So they cited the expected fiscal deterioration over the next 3 years, a high and growing government debt burden, and the erosion of governance relative to peers. So all of this fighting, right? It matters, okay? The rating agency pointed to the repeated debt limit political standoffs and last minute resolutions have eroded market confidence in the country's fiscal management. What a shame. What a shame. The TV news stations love running this stuff for ratings, but it is a serious matter. So we just got downgraded. But anyway, Australia industry shrinks for the 15th month. Okay, that's important. Right, so we got some contraction going on there. Then we seen with New Zealand and things like that in the ISM manufacturing U.S. job openings. Any questions on the fundamentals?
Hi, Benny.
Yes, sir.
Yeah, just on the back on the Fitch downgrading the states, does that mean that um the economy is heading for a recession in the next 2 3 years?
No, not necessarily. What that means is just overall, pretty much. Look, you better get your confidence together. All right, we're gonna continue to be the world's reserve currency, and they always say, hey, it's nothing more. You know, when you talk about security, there's nothing more secure than a full faith and credit in government in the United States. Well, it just got downgraded. I mean, I think we've been here before, but it's just kind of is the world is giving the United States, a warning shot. You better get it together. Doesn't necessarily mean we're headed for a recession. What it means is we better get a grip on our fiscal policy, and we better start paying attention to that. Got to get it under control. So they've got to put their heads together. And what this is saying is the confidence is kind of dying off in the fact, because we every year almost, it seems like we go down to the deadline to midnight, and then all of a sudden they all come out and they stand at the podium and the mic and say that they've reached a deal. Well, it's just like, how many more times are you gonna do that? Like, get it together. So doesn't necessarily mean we're gonna head for a recession. That point. There's some other things, some mixed data, looking out long term that shows signs that could happen. But right now, man, the market is rocking and rolling in the near term. I mean, S&P is driving up. We just went from a possible recession, now people saying no recession, to I heard some investors talking about, and projections talking about S&P 5,000 next year. So, you know, who knows? Who knows? Sometimes, I guess I'm starting to figure out after all these years that a lot of fancy suits on the TV don't know any more than me or you. So I actually today, Jeremy, heard a pundit give a lot of credit to technical traders. That's almost unheard of, especially on Bloomberg, because they're so fundamental driven. And she admitted, she said, it seems like the technical traders have it right at this point. The market just keeps moving up. She's like, so she gave a lot of credit to some technical traders who are focused on, what the price action is saying on the charts. And the good thing is we do a little bit of both here in the inner circle. So yep. Any other questions?
Thank you.
You're welcome. Nope. All right. You guys you're tired of talking about me talking about fundamentals. So let's go on. Let's move on to the chart. Take a look at the DXY. So weekly chart, right? Dollars bouncing around. Okay. We've got that longer term crown drawn, but it just won't break through that weekly support level. So we've got another dollar reversal here. And so for the week so far, we've been bullish. So we're looking at 3 straight weeks now of dollar gains to the upside. Okay. So right now, dollar bulls are out. Okay. Here's the daily chart. It's really just one big range right now. Right. We were focused on these levels down here before, broke back above it. All right. So we're pushing long on the dollar. We'll see how long that lasts. Any questions on the DXY? Okay, cool. All right. So let's move on and hit the chart. So I'll give you guys the opportunity tonight. Put in the chat any pairs that you want to take a look at, and we'll make sure that we look at those. I'm gonna check in on this Aussie CAD setup that we posted just to see what type of progress that it's making. And we see we're starting to get a bounce and a pullback now, but that's moved quite a ways to the downside so far. So that's worked out pretty good for us. We've got an extension set at 87.53. So we got price pulling back. Makes sense, right? So just manage your trade accordingly. That's in pretty good profit. Is anybody able to take advantage of that Aussie CAD trade from yesterday? That moved pretty quick. Yep.
Yes, sir.
Awesome. All right, cool. Brian, good evening, sir. How are you?
Good evening, bro. I'm doing well, man. How about yourself?
Doing pretty good. Glad to be here. Feeling a lot better, man.
Yes, sir.
Earlier today.
Yeah,
So
man.
yeah, man.
Glad.
Good medicine. So yeah. I don't like to take too much of it, but sometimes you gotta do what you gotta do. So that's the Aussie CAD on the 15. Wanted to check in on the this Euro USD, Euro GBP. I'm sorry, it's the first one. And Ryan, you posted something in the Discord today too, right?
Yeah, I posted the Euro USD.
That's right. Okay. So here's the Euro GBP. It was ranging, right? We posted it because it started to break out from the range, right? It started to move up and it held within that AD boundary. And so we're right around a good fair value price. And so decided to take a shot on. It's not a trade, not a pair that I trade often, but figured it's sitting pretty low, good discount. Why not take a shot on it? So far it's paying off. We'll see how this Euro GBP makes out. We'll see how it makes out. But so far so good. You always miss the trades posted. But you see him coming through on the Discord, or you're super busy? Just busy. Okay. Okay. Cool. So that's that right there. So we're gonna see we're gonna see how this one plays out. Right. I'm always skeptical on the Euro GBP, but that one was a little bit too good to pass up. So tight consolidation range, a bit of a breakout. It's a slow mover. So let's see what happens. Let's check in on the Euro USD. Ryan, what time frame was this? I can't get to my Discord right now. It's all
I was on the
discombobulated with
one.
the changeover. On the one? Okay. Oh, off the coming off that 80-20 that we
Yeah.
had from before. Yeah. Okay. So right in that sweet spot playing it long. All right. I can dig it. So it's kind of just bouncing around right now. Let's let it play out. So this is the Euro USD. Looking forward to get long. Okay. Kind of settled in, retested this area twice. Stochastics in the sell zone now. Let's see what happens. We saw that the euro gained some strength today. We know the dollar's strong, so maybe it'll range for a little bit. Let's see who wins out. I can take this 382 target out of there now. So this 80-20 is over. All right. So if that continues to take the ride long, right, we've got a D extension at 113.30. So let's see what happens with it. What is that? 323 pips away. All right. It stops below the C. Call it 85 if you're below the A. Call it 190. So you like that risk to reward. See how it plays out. Divide your risk by your stop loss, everybody. That's going to give you your lot size. Always remember that. A simple equation. Keep you safe. It'll keep you safe. Any questions on the Euro USD? No? Good. All right. All right. What we have here for the setups. To the top. First one that came through. Pound CAD. Let's take a look at it. I'm not taking a look at this one myself. All right, so let's see where we are. Still hovering around this area on the weekly. Okay, just bouncing back and forth. Right. So you can see here, indecision, right? Now in the second week of indecision, you come down to the daily chart, you see it's kind of doing the same thing up here in this area. It's kind of stagnant right now. So we got to pull back to a 382, and then it took off. All right, so this is going to come down to, we've got later this week, don't we have a rate decision for the pound? Yes. All right. So we're expecting 25 basis points, right? I was listening to one on the Bloomberg surveillance today. I was listening to, and they were saying there may be some downside to that quarter point rate hike, kind of like the euro, depending on what they say afterwards. Because it's super sticky. In the UK, they did get better CPI data, but they're dealing with the wage inflation. So how serious are they going to take it? Are they going to stay safe at the 25? Is there a possibility that they go 50? Got to rein inflation in. So that's going to be big this week. And then, of course, Governor Bailey speaking at 7:30 a.m. It's always about what's going on and what the future looks like. All right. So 25 basis points are already currently being priced in. So this one's kind of bouncing around a little bit. We got oil prices going up with the CAD. So we'll see. This one's kind of just hanging around in the zone, right? Is it in our sweet spot? Yes. Okay. But we needed to break out. So for example, we start getting back above, right? What is that? 16.99, right? We take out a high, we retest. So like this. Okay. We start getting that positive momentum, take out some levels, pull back, and we get involved. If you're not already sitting in it anyway, watching it bounce around. Right now, it's just moving sideways. Okay, it's just moving sideways. Let me clean some of this up. That's the original markup. Okay. So we got that initial thrust out of the zone. Okay. All right, so far not too bad, just bouncing, moving sideways. We're still within our AB boundary. We still got a long way to go in this setup if it's gonna continue bullish. Overall, that's the direction it's been moving. So interesting to see with some of these pound pairs what happens leading up to the rate statement, right? I hope a lot of you see now kind of how the activity can slow with a particular currency around major central bank decisions. Okay, so let's continue to watch throughout the rest of the week up until we get to Thursday, the 3rd, to see what happens with the pound. But yes, right now we are still in our sweet spot there. Okay, looking for price to move bullish. You're either putting your stop below that A or below that C. Okay. All right. Any other questions on the pound, on the pound CAD?
Yeah, Benny. Hi, Benny.
Yes.
How are you?
Good. How are you?
I'm good. So I'm seeing that you are live streaming on YouTube. Did you get it? Am I late on the good news?
Oh, we had we had to reload.
Oh, okay. So my question is actually for Ryan. Ryan, are you still holding the pound cat?
Yes, I am still holding that.
Jesus Christ.
Didn't take his A out. Didn't take his A out.
Didn't take the A out.
Didn't take his A out.
Didn't take the A out.
Okay, all right.
Didn't take the A out. We know it's tough. We know it's tough. But look, when when you try, I'm laughing because me and Ryan talk about the same stuff all the time. But when you're in, right? Ryan says all the time, I'm sticking my toes in the water. So him sitting in that pound CAD is not timed as a counter.
Wow.
So you get what I'm saying? So you get the way we do it is because it's like I always say, it's like insurance, right? You got that $500,000 house and it burns to the ground, and all of a sudden they can cut the check to pay it, right? Why? Because they have that risk spread out, right? Over all the policy holders. So it's just that one big pot, right? And somewhere along the line, something's gonna go wrong with somebody's house, right? Something's gonna go wrong, but they're gonna be able to take care of it, but it's not gonna put them under. It's the same thing with your account, right? And using risk management. That's why insurance companies have different stipulations, and they don't want to be over leveraged in one area, right? That they know it's a higher risk sometimes down there in the Southeast, right? Low floodplains and hurricanes, right? It's an increased risk, right? But they spread it out. That's what we do. That's the approach we take in the Forex trade room. So Ryan might be in there at 0.5%, 1%, 1%. He can tell you better than I can, right? But he ain't worried, right? Even if that trade is bouncing around this sweet spot, right? But even if it was in drawdown, headed down to the 78686, he still would be able to get involved in other trades because his risk management is on. Okay? That's the key.
Thank you.
1%, right? Said he's in there at 1%, right? And then he'll have, right, like I do, and like a lot of our other group members do, you also have in your trade plan, hey, what do you want? What's your max exposure gonna be? Okay, so if my max exposure is 5%, then you're in 5 setups max at 1%. Now, if it's a 0.25%, then that's a different story, right? You have to redo the math. But that's how it goes. Yeah. Because I know I came to the conclusion after several years that I'm gonna lose some trades. I'm not gonna win them all. Right? All right. So that's that. That's that. This is the last, that's the last TP. So right now that one, that TP should be up there somewhere. Any other questions on this pound CAD?
Hey, Benny, I got a question.
Sure.
If we combining the fundamentals to this, and we looking at a rate hike, which would make the pound stronger and would be a bull bias, right?
Potentially.
So if that's the case, would that be considered trading the news?
You're already in the setup.
Okay.
Trading the news, when most people talk about trading the news, it's like when you have, like, for example, when most accounts have blown, like on non-farm payroll. At least that's what it used to be. That's what brokers used to report. Where you're trying to time, right? So say the non-farm payroll comes out on Friday at 8:30 and the numbers are released. Okay. And this is why you'll have a lot of prop firms and things like that say, you know, depending on the type of program you're in, they don't want you trading 2 minutes before, 2 minutes after the news.
Okay.
Because what people will do is this, right? So people do stuff like, all right, well, we know the market's gonna move, right? It's gonna move. It's a big report. So Thursday comes and it's like, oh, we got a rate date coming out, 25 basis points, the market's gonna move. It's gonna create volatility. And we know that 25 basis points, it's a hike, which is technically positive for the currency, but it depends on how the market takes it, right? Remember market sentiment, how they take it. Like, oh, okay, we were expecting 25 basis points. That's already priced in. They didn't show signs of being more aggressive. You know, maybe he says something dovish in his statement afterwards, in his press conference, the head of the Bank of England, right? And it just tanks. Kind of like what happened with the ECB, right? They raised by 25 basis points, but Lagarde got up there and started talking, and you saw the euro tank that day, didn't you?
Yeah.
Yeah, right. So what the people do, they do crazy stuff like, oh, I'm gonna set a buy stop and I'm gonna set a sell stop. So when the news come out, it's gonna be some volatility. And if it's positive, it's gonna hit my buy stop, and I'm gonna be in the green. But what people don't understand, and if it's, you know, if it goes short, I got my sell stop, so I'm just gonna take it short. But what a lot of people don't understand is when a non-farm payroll is released, it's actually a series of reports. So oftentimes you'll see the initial market reaction, boom. And then you'll see the secondary market reaction, boom. Now you're activated in two orders, or you over leveraged and you get blown up. So that's what we mean by not trading the news, right? It makes sense.
Yep, it does. Thank you.
Yeah.
Benny, why are you talking about 3 years in the trading, Ryan? Why are you talking about me, man?
Would you say that again?
So why are you talking about me back in 2015, 2016?
No, man, because I was with you at some point. Like
they'll tell you about that bounce back and forth and both the orders in.
They don't.
You and draw down 150 pips.
Yeah, they don't. They don't do that. They don't do that. It seems like everybody comes in the game is introduced to that. Like, oh, they get you hyped up. It's non-farm payroll day, everybody. And they, like you said, they fail to tell you the whole story. But sometimes, when I first came into the game, before I invested in education, what I learned looking back is like, man, those people trying to figure it out themselves too. They didn't even know.
Facts.
So it's a wild game out here. So, yep. But that's where we are. But that's what we mean by not trading the news. Yep. So, all right, that's the pound cat. That's why I left indices alone. Oh man, you don't want to get caught in this. So what was the next one that we had? Great questions though, everybody. Cat Swissy. I thought I looked at this today. I didn't see too much. Maybe I'm wrong. Let me see. Okay. Too much, right? Again, we're still challenging that low. It doesn't want to. It doesn't want to push lower right now for some reason. That's the weekly, right? But you've got the CAD doing the dance, and we know what's going on with the Swiss National Bank and what they're doing to support the Swissy right now. We talked about that on Saturday. So just the stochastic is pushed up, right? Where the momentum to the upside is slowing down. Where are we at? 90, what is that? Gotta be, is that 95? Something like that. It's up there. It's up there, and we're stalling at this level. So here we are. This is something we had for a while. That was the initial breakout that we took a while ago. And now we're holding up here. Right? So right now we're bearish. We're holding below that 66.17 and that 65.97. Those are daily levels, and it's falling bearish. So if we come in, right, put our support in, you got support at 65.46. That's a swing low. Okay. So if you're looking at a smaller setup, right, it's like, hey, which is already taken off. Next test for this can be coming into the 65.46 level. Okay, so kind of stuck here in this range right now. Okay, Swissy's winning that. Okay, so next test, right? We see where our stochastic's at. The momentum may be slowing to the downside, so maybe we stall right here at this 65.46. But right now, that's moving bearish. Right, that's moving bearish right now. Here we are in the 1. Okay, it's moving bearish. So when we talk about this support, okay, we want to see how this bounces at this support. Okay, back down. Okay. See that? So we're just shy, right, of that 382, just shy. So it's climbed right out of that 80-20 zone, but we got rejection right there. So we want to see what happens if we get right back down to the support at 65.46. Right. So technically we don't have it yet. It's made good progress, right? So what is that? Coming out of the zone, didn't hit the D. It's like 90 pips to turn back over. So I would say wait to see, right? If you're not involved in this trade, I want to see what happens when it comes back down to that support if it gets there. Right. That 382 target was almost hit. Anybody take that? That's within range to take profit on the setup with resistance right? I didn't play it, but
I'm still holding the longer move.
You still holding a longer move to the upside
Mm-hmm.
on the cash Swiss
I had 2 orders in, so I took profit on one, but
yeah.
my earliest entry I'm holding because we got an 80-20 on a daily too.
Yep.
So.
Yep. It makes sense, right? On the 80-20 side, I'm just saying if it, because it has made the progress. That's a positive play for 80-20. That's up big. You know what I mean? But if you're looking for what do I do next, or what do I haven't gotten involved, that support right there may come into play. And then it may continue because that's moving short off that level right now. But yeah, the larger players up top, right? So let me see. Yeah, thought I had that. I got a larger fib running off the cash Swiss on this play. But that zone, right? And then if you run your sub fibs and things like that, that zone is holding pretty good. It's just a matter of we can get back above, right, this level. Right? Get back above that 66.17, definitely continue. Right? But we'll see. We'll see what happens on that bounce if we get there. So who else said they were holding on to that? But they hate this pick.
I did.
Jeremy, yeah, okay. So it's doing this thing, right? But it did it before. Right? That's his prologue. Look at that. See how he keeps rejecting that level right there. So yeah, and Ryan, you said you took profit on one setup, right?
Yeah, on the hit of that 4 hour 382.
Okay.
But I got
Okay.
another my earliest entry was at 65155.
You way down there. Right there. You're right in that area. So you're good and positive on that.
Yeah.
Yeah. It made a good recovery, right? Didn't, just like if it doesn't take out the A, it didn't hit that big extension, that's still rolling. We're back in the buy zone. Right. So see what happens if we get a test off support. May form a low and continue, but it's been a wacky play, but it made the progress in the direction. Man, that's how many pips is that to the we talking 3 pips from the target.
Hey, Benny, can you hear me?
Can hear you.
Hey, I have a quick question for you guys. Okay, where was your entry point on that pair right there? I still don't understand your trade idea, so I'm still trying to figure them out. It says entry at market, but where was your entry at on that pair right there?
Yeah. So what we do, right, is your entry on this counter trend move would have been here. Right in that zone.
Oh, okay, all right.
Yep. You sound kind of far back though. Can you turn your volume up maybe?
Yeah, I'm just not this mic, so I don't know if you can still hear me. Hold on.
Oh, I got you. I understand.
Yeah, I'm gonna be switching mics here pretty soon.
Okay. That's cool. But yeah, great question. Right. So when we play the counter trend move, right, on these pairs, right? Because when you look at extensions and things like that, you're looking at extremes, right?
All right.
And that's what we like in a sense. So if you and that's a great question because you probably have some other folks thinking the same thing, right? So if we have an AB boundary, okay, this is our 80-20 play, right? So in order to get that AB boundary, you need a swing high and a swing low. You follow me on that?
Yes.
Right.
Yes, I do.
So we're looking at a resistance level, okay, and that B boundary represents a support level going in that downward direction, right?
Mhm.
So what we were taught by our mentors over time is a sweet spot in the market for the counter trend trade setup that we deem and we coined the 80-20. But what it is the market loves to, when the market retraces, right? And the way we use the fibs, okay, when the market retraces, it loves to fulfill at least a 382, right? So if this A to B move, right? In this case, with the fib running to the downside, that's an A. Okay. And this is a B.
Okay.
Got it?
Yep.
All right. So if the market moves in waves, we say the market moves in A, B, C, D waves, right? Okay. So when you're looking at it from a fib sequence, we've got our AB. The market likes to retrace in a downtrend, right? A, B, C. Our C is our highest point within our AB boundary. Okay.
Okay.
So say it pulled back to a 61.8. That's my C. Okay. And when you have a C, wherever that C lands, eventually you're going to get a swing high because that's what the market does, right? You get a swing high, which is actually another what? Form of resistance eventually, right? That's where we wait for the 2 candles to the left, the 2 candles to the right, in this case, that are lower than the center wick high. Though that's the bread and butter, right, in regards to support and resistance, right? When you say, well, a high and a low is subjective. No, it's not, right? It's a candlestick formation, a five candlestick formation, swing high, swing, right? So then eventually, based on how far this market retraces, okay, whether it takes back 23%, right, of what it gained to the downside, 38.2%, 50%, 61.8%, 78.6%, 86%, 100%, right? Follow me there?
Yes, sir. Yes, sir, I do.
All right, so based on based on the retracement, we can project the extension. Boom. Anywhere, 236, 38.2, 50%, 61.8. We project the target, right? It's all math of a 1.618 extension. That's how it works out. Okay. So that helps us, right? And it takes a while psychologically, right? To stay in trades, right? That's why Ryan's holding that pound CAD position. Okay. Because we've got a projection now that, hey, we got a 61.8 pullback. Price, if it continues bearish, I have enough momentum to get to the 1.618 extension. Okay. Same thing. Yep. Same thing if it hits 50, 382, 236, whatnot. Has the potential. Okay. There's some caveats, and I'm going to tell you here in a second. If we get a 786 retracement, the further the market pushes back and takes away, the less energy it has to the downside. We talked about it last week. Energy trampolines, right? So if it pushes up and it takes back 78.6% of what it gained to the downside, that makes sense, right? 0 to 100 is 100%, takes back 78%. Then the market, we say, has enough momentum. If the bears take over and continues bullish, to make it to the 127. Follow me on that one?
Okay, it's starting to make sense.
All right, good. So if the market pushes down, boom, 0 to 100%, takes back 86% of what it gained, deep retracement. Okay, boom. We say, hey, if the bulls come back, the bears come back in, it's got enough momentum to push it to the 118. Right? Beautiful thing about the smart fit is it color codes it for you. But the key, right, is to know your numbers, right? Know your retracement levels and your extensions. So this is how we set targets. We use the fibs fundamentally. It's nothing advanced. We teach it fundamentally because if you talk about what's important to trading, we say, hey, figuring out market direction, risk management, right? Risk to reward, this gives it all to you in one setup. Because I could base my trade off of that. I could put my stop above the A, because we like to say, if price doesn't go and take out the A, it has no choice but to go your way. If it doesn't take my A out, that trend is going to continue, right? Because in essence, this A is an A high. And if price pulls back within my AB boundary, follow me now. If price pulls back within my AB boundary, and this A stays intact, and this is an A high, if it reverses, then guess what? I just made a lower high.
Yes. Yep.
You get it?
Yes, sure do.
Right? So that trend can continue. Now, will it move to the D extension in a straight line? No, right? And we say we don't worry about all of that. That's what makes the methodology easy to follow once you get it, because we're not worrying about if this trade wants to go into, consolidation or move 50 million ways, right? However, if it doesn't take out that A and price remains bearish, we expect it to go to our extension, right?
All right.
And we trade small. We trade small. It's because this is not going to be a 10 pip trade. It's going to be a lot bigger than that. Okay, it's not a scalp. Okay, because we're swing trading. We're looking for price swings in the market. So what is this? In regards to the fib, what would a pullback of, say, 78.6% represents? We're looking in the market because we're buying and selling we're looking for fair value. We're looking for a discount. So I want a 78% discount, an 86% discount, a 61.8% discount, a 50% discount. You get what I'm saying?
Yes, I do.
Right? I would prefer those. Yes, the market can react off this 236 and go to the D, but based on our trade plan, we want the biggest discount we can get, right? Now,
Okay.
we have caveats that we can build into our trade plan and say, hey, I'll take a trade at 38% off if the right things align. Maybe I got structure here, past resistance. Maybe I've got a double top, right? Maybe you have to build that into your trade plan. But just with pure price action, I want to come up to at least a 61.8, a 786, 86. Why? Because it enables me to put my stop out of the way if I prefer to do it this way, right? So think about it. If I put a stop above the A, because if it doesn't take out the A, it has no choice but to go my way. Clean this up a little bit. And if I come to a 61.8, now we said one of the things that's important is, hey, to try to figure out market direction to the best we can. So I'm bearish, okay? All right, we're in a bearish trend, and I'm trading with the trend in this situation. And I haven't forgot about your question, I'm gonna get back to it, but I want you to see everything in its entirety, okay?
Okay.
So I'm bearish, I've got a 61.8% discount. Oh, it's the golden ratio, it's magic, right? No magic really behind it, it's just math. Why? Why do I like trading at the 61.8 or higher? Because if I put my 61.8 play in, okay, especially if I got some structure. Like if I look left on the chart, you heard of that before, people say, look for structure, look left. And I've got a past level of resistance or past, past support become a future resistance in that area. I like that because I can put my stop out of the way and say I get that 61.8 pull back like this. And my D extension becomes my 1.618. Follow me now. If I take that trade there, then guess what? Okay. Then, because we said, hey, market direction is very important. Risk management is very important. Risk to reward is also very important. So if I wait for a discounted value, 61%, even 50 with structure or higher, guess what it's going to do all in one setup? It's going to put me in the right risk to reward ratio that I prefer. Oftentimes a 3-to-1. You heard 3-to-1 before, right?
Yes, I know.
Yep.
I'm familiar with it.
Yep. 2-to-1, 3-to-1. Well, guess what? If you use the fibs the way we set you up, and we use the extensions, most people tell you about the retracements. A lot of times they don't correlate the extensions, right? So on this particular setup, if I entered that 61.8, my stop loss is, call it 72 pips. Okay. 72 pips. My TP,
Woo.
right?
Oh yeah.
Call it 240.
Mm-hmm.
Okay, right? Got that?
Yep. Yep.
There we go. That's why we use it, right? So if we move up higher to a 786, right? I just have to do some adjusting. Okay. So say I entered that trade at a 61.8, that's fine. I'm in some drawdown. Okay. We trade small. We divide our risk by a stop loss so I can eat that up. Because if I'm risking 1% and I divide my risk by my stop loss, whatever it is, the most I can lose is 1%. Follow me there?
Yes, I do.
All right, cool, right? Makes
Yes,
the
I
math
do.
real simple. Now we've got a pullback. So guess what? If it pulls back to a 786, say I had another entry there, right? Say I wanted to risk a 0.5% and I split it up 1/4%. Trade takes me in. Or maybe this is my initial setup. Guess what? My stop loss is now gone down, call it 45 pips. And my TP to match the extension is 200. You see, I'm still within the proper risk to reward ratio. So I've used the fib. I got my direction. I got a down fib. Boom. My risk management, I take my risk and I divide it by my stop loss. Okay, I'm in 0.5%, 1/4%, whatever. I got that figured out, right? So if my stop loss is 72 pips, I'm gonna take whatever my account is, and that 1%, I'm gonna divide it by 72. That's gonna give me what I should be trading at my lot size, right? And then I'm gonna enter the trade. And as long as it doesn't take out the A, it has no choice but to go my way. The problem that people have once they figure this out, and it's only a temporary problem, right? As long as you don't quit on yourself, right? Only way you fail is if you quit. The issue that people has is holding the trade. So what'll happen is they'll say, oh, I just made 50 pips, I'm out, taking my money. Boom. Guess what? You get another setup like this and the stop loss of 72 pips. Guess what you just did? You lost the trade. You know what? Now I'm negative. I'm net negative because I took my money out the market too early. You see what I mean? So eventually what we evolve to is I've got that position in the market. I get confident in what I'm doing. Now I'm in profit. I'm playing with house money. Eventually I get to the point in my trading career where I'm not looking to bail every time I see a pullback. I'm actually going to add to the position because I'm already up in my first position. You know what I'm saying?
Yes, I do.
And now I'm compounding this trade instead of jumping out after 10 pips, right? So that's overall in the downtrend what that looks like with the trend, okay? So I wanted to cover that to bring your lesson full circle, okay?
I guess my biggest problem is trying to figure out where C is gonna, how do you figure when you have confirmation for C is that? I guess that's my biggest hang up right now.
Yep, so what you do is, I'm confident, right? I'm moving bearish. I've done my top-down analysis. I'm moving bearish. My C, you have your rules. I'm looking for structure, right? I'm looking for how to form in that zone, right? Some of us use buy and sell limits, right? So when we've got that down fib going, we just want to see it pull back to that level to take us into the trade, right? Some of us will put another order in, right? At that 786 level. So 2 sell limits. So, hey, I'm away. If price pulls back, I'm overall bearish. That's my bias, right? I've got my risk figured out before I ever take the trade. So I'm not going to be too concerned about a perfect entry, right? Because I'm not over leveraged. Say that again, because I'm not over leveraged, right?
Yes,
so
sir.
I'm going to let it take me in. I know if I get stopped out on these 2 positions, I lose 1%. I got a 0.5% here, 0.5%, 1/4%, I lose a 0.5%, right? So I'm going to let this swing. I expect this to move bearish. Now this thing may move up, may move higher, right? And then it'll eventually move down. If not, I'm protected. I have to be comfortable with losing my 0.5% or 1% before I ever take the trade. Most people don't do that, okay? Now, the only other thing you can do is because we don't control the market is you say, you know what? My sweet spot is a 61.8, but I'd like additional confirmation. So I might say, hey, I've got to pull back to a 61.8, but I need more evidence, right? Because it has to move bullish to get to this point, right? So it's got some bullish momentum. It's retracing, it's pulling back, it's correcting, whatever language that you use. So then you say, you know what? I need some more confirmation. So maybe I want to see a trend line break, okay? So maybe I use trend lines. And once it gets to that level, you say, I want a swing high to form, because if that swing high forms, it's giving me a new level of resistance. And then I want to see a trend line break. Bang.
That makes sense. Okay.
And then maybe I need additional confirmation, right? Because that's where all these indicators and everything come into play on these moving averages, right? It's at your point of entry. Everybody's trying to figure out that perfect point of entry so they don't have drawdown, because most of the time they're over leveraged, right? We don't worry about that in this group. But if you need that, if you have a checklist, you say, okay, sweet spot. And you might even say, I need my sweet spot in regards to my fibs, but I would prefer for there to be structure, has support. right?
Fair resistance.
Yep, becoming future resistance, bang, right? So you may look for that and look left. You say, I need that to happen. I need to swing harder for him because that's telling me is respecting that past structure. And then I need a trend line to break, preferably with a bearish candle close, boom. And then I'll get into the trade, right? You may say, I need that structure, I need a trend line break, and I need my stochastic to be in the sell zone for me to take that trade. Or I need to see some sort of divergence on my MACD. Or maybe I'm waiting because I put a crossover like a 8 and a 13 or a 20 and a 50, and I needed to cross over for me to get into this trade. Most of the stuff you see, it's all around trade entry, right? People have it lit up like a Christmas tree. It's all about trade entry. And a lot of times that's just psychological, where you need to see so many things line up to be able to take a trade, right? You're putting your money on the line. So you can do that. Or you can say, you know what? I need a trend line break. And you know what else I need? I need a pullback.
A retest.
Yep, a retest. And you notice how that's moving in a wave, right? Even on that retest. So say you come back, right, and it pulls back. Sometimes you agree retest, sometimes you don't. But in essence, if that high forms and you get a low here, all you have is a sub fib.
Yep.
Right?
Makes
Because the
sense.
market is on its way from C to D, is gonna move in waves. On its way from B to C, is gonna move in waves. The AB boundary was created moving in waves. Why? Because an old CD becomes a new AB. That's it, right?
Yeah.
So it's moving down. So from this point, you can make the decision. If I wait on the pullback, do I want to trade just the sub fit, ABCD? I'm out. And then when a new one forms, okay, boom. My C becomes my new A, my D becomes my new B. Boom. Do I just want to, I know on this particular scenario that I have from C to D, I have 240 pips, call it. How I get there depends on my trade plan. Do I want to just put in one order and ride it out? Do I want to add to the position on the pullbacks? Do I just want to play the smaller ABCD waves, and every time I take profit and every time the market gives me another opportunity to get in again, I'll take it because I already know I have 240 pips of downside potential based on this fib sequence. You guys follow me on that?
Yeah, man, I follow you big time.
All right. So that's it.
This really started to make sense.
Awesome. Awesome, right? Repetition is the mother of all skill. You're welcome.
Thank you so much.
You're welcome. So that's that. That's how this plays out. So however this gets here to this D extension, once that D extension hits, your C becomes your new A, your D, once the extension hits and a new low forms, so it can run past this D extension, right? As long as it wants to. What it waits on, what you have to wait on is a new swing low to form after the D extension is hit. So it might do it right when it hits the D extension. It might move down and hit it. But once that new low forms after the D extension is hit, you have a new AB boundary and the game is played again. Okay.
It moves in waves.
And that's what we always say. Hey, we don't know how long it's going to take to get to that from that C to the D. We just know it's going to go there. And if it doesn't take out my A, that's where it's going, baby. And you know what? Sometimes you're going to get caught in situations where price moves in your favor, 150 pips, something happens fundamentally in the market, and it takes it all back, and you get stopped out in profit, or it takes out your stop if you didn't move your stop down, right? With your trade management. That's part of the game because it's never about one trade. You determine your strike rate over a series of trades, 100 trades, 200 trades, right? So if you have an edge in the market, it's about how that edge plays out over time. So we never get worried about losing a trade because we know what our edge is, okay? And that's key. So now with, okay, and I know I'm running over, we got stuck with this lesson, but it's very important. So we know what that looks like with the trend. So we have situations, right, that was talked to us by mentors many moons ago, where it gives us an ability to counter trend trade, because when in the very beginning I said, hey, that market loves to find at least a 382. Well, there's a move in the market that we call the 80-20, because you will see where the market pulls back, right? It's trying to find that C. And it'll pull back and it'll take back 23%, anything less than 38%. Follow me on that.
Yes, I
Gotta have an understanding on that.
yes.
Anything less than a 38%, the market will pull back. All of a sudden, like in this example, market retraces less than 38.2%, it'll push down and it'll take out your B boundary. Remember, this is our B boundary.
Okay.
It'll break the B boundary, shy of making a 38.2 retracement. There's this thing that happens in the market. It's a pattern in the market where this price, it does that, and it'll just stall in this 118, 127 zone. This is going back to your original question. Okay. Manage to see the sequence in play.
Yes.
So it'll stall in this zone at this low price. And oftentimes it'll move back and forth. Okay. And you could have had a series of 6 or 7 bearish candles. It'll get to this point and it'll just start stalling. The momentum will stop. And it'll even push lower than that sometimes. But then what it'll do is it'll push back up for a deeper retracement. And so we call that the 80-20 because we say over this long series of trades, about 80% of the time, when the market aligns like this, it'll pull back and hit a 382. At least a 382 before continuing its trend to the downside. Follow me on that? So it'll return back into the AV boundary for at least a 382 retracement or higher. Boom. So that gives us an opportunity to counter trend trade that in this situation. That's our sweet spot for a counter trend trade. So then we set TP1 at a 382, and we'll set TP2. Now we'll set TP2 at a 61.8. Bang. Okay. And if price wants to continue and it gets bullish, say it hit, sometimes it'll hit like a key weekly support or daily support or something, and it's just time for it to get bullish. And we look at, hey, this is probably, it might be a trend reversal sometimes, right? Sometimes, not all the time, because we talk about moving through the time frames and how time frames are fractal. But then what we'll do is we'll set the A boundary as a TP3. I'll put it just like that. So on the counter trend trade move, TP1, TP2, TP3, right? And we'll counter that. Now, you can play, it's just kind of how, like, if price doesn't take out the A moving with the trend, it has no choice but to go your way. If this price doesn't hit the D extension and this counter move, it's going to return into the AB boundary. So you could use a wider stop and put your stop loss at the D extension, right? And it's crazy how the math works out. See, look, off my 127 to my D extension, call it 67 pips or so. But to my 382, it's 124. See that?
Yes, see that.
See that?
Yep.
Or higher. Or it's just like when we were trading with the trend and we were at that C high, maybe you use a trend line break. You say, man, you know what? I really like my stops tighter. Okay. Then you use a trend line break, an additional confirmation, and tighten your stop down. Okay. And we know that when we use tighter stops, psychologically, we have to be comfortable with the fact that my strike rate is probably going to go down. Right? So maybe I'm a 65% trader, right? In regards to my strike rate, maybe it goes down to 40. You have to be comfortable with that because I'm using a tighter stop loss. I'm trying to be more precise. I'm trying to take a scalpel to the market, a market that I don't control, right? When a doctor uses a scalpel, he's in a controlled room, in a controlled environment. We're in the Forex market, we're not, right? So you can take that scalpel if you want to, but just know, right, that I'm gonna get stopped out more. That's fine with that. That's fine because these are big moves, right? So if you have the stomach and the mindset to where you can take 5, 6, 7 losses in a row and don't bat an eye, knowing that when I hit that runner, it's gonna make up for those losses and then some, then you're good to trade it, right? But a lot of times the issue is people don't stick with it enough to find out what type of trader they are. That's why we say the only way you fail is if you quit, right? So this is where the idea comes from. And then whatever conference, some people use a cloud. We taught people how to use the cloud and look for price to break the cloud and wait for things to line up with the Ichimoku cloud. Whatever confirmations you use for entry, you're gonna do it at this point. So you see with our style, we only look at certain areas to trade, no matter what the pair, no matter what the asset, in our sweet spot zones with the trend, or when we counter trend trade at that 118, 127 zone. So if we go back and we take a look at this Aussie cat with the trend, okay? If we go back and we look at this now, okay? And we zoom out, and this is on a 15-minute chart. And this plays out no matter what the time frame, okay? Our stop was above our A, look at the pullback, right? This was the entry on this, and that's just because of where I caught it. If I would have caught it earlier enough, I would have been at a 61A, I would have been in drawdown, and I would have had it at the 786. But instead, when I saw this setup, we only took it at the 786. And you see how this is doing whatever it wants to do, but it's moving towards its target.
Yeah,
See what I'm saying?
I see it.
Yeah. So for example, like this here, this was an 80-20 potential. It failed, right? See here, AB boundary, it made a shallow retracement less than a 382. It broke the B boundary, it just shot straight down, it failed, right? So if you said, you know what, I'm placing a limit order here, a buy limit order on this scenario, okay? A buy limit order on this scenario, and I put my stop at the D extension here, okay? You would have lost, right? That's fine. You know what I lost? 0.5%, 40%, 1%. I figured it out before I took the trade. If I'm risking 1%, I gotta lose 90, 100%. I have to lose 100 trades in a row to blow my account. Now, 100 trades seems like a lot. It's not a lot if you just, every time you open your computer, you just jump into something that looks good and trading what you get. But when you have a trade plan and you have specific zones that you look for and you trade, 100 trades to lose in a row is a lot of trades. That means I have to lose 100 80-20 scenarios and 61-8 scenarios with the trend, 786 scenarios with the trend to blow my account. Not gonna happen.
Right.
Not gonna happen.
Yeah.
But if you just popping in and out, I'm trading the NASDAQ today, I'm trading the S&P, I'm trading gold, and you don't have a plan around none of it. See, no matter what we trade, we look for the same setup. We look for the same sweet spots. That's the difference. That's the difference. That's why we can trade and cover all currency pairs and look at different assets, because we're looking for the same scenario, because the market moves in waves, no matter what you're trading. Crypto, indices, stock, wheat, hogs, cattle, oil, gold, platinum, silver, don't matter. Don't matter. This is what it's gonna do. We can show you. It does the same thing, right? Tesla stock, Amazon, Apple, because you're looking at the buying and selling habits of banks, institutions, individuals, people, even the algorithms people program. It all has a human dynamic. So this is this is a move here that's moving. If we go back and we look at like this Swiss yen, let's take a look at this Swiss yen, right?
Okay.
This is off the weekly. This is from a weekly chart. No doubt about it. That hit a sweet spot and that's long. Yes or yes?
Yes.
That's headed to the D extension.
Yeah. Yep.
right? So this is the market moves in waves, right? Here, it didn't take out the A. It has no choice but to go your way. That's exactly what it did, right? Even here on this 4 hour, which is one I completely missed, right? Look at that. Here, you had a series because the market was so impulsive. Less than a 382, just gone, right? Look at this pull back into this zone. So my projection is going to be this D extension, which actually falls in line with that higher time frame. There, see,
Perfectly.
that's where it's going. We don't care how it gets there. All right. So here, you either put your stop below the C or you put your stop below the A, right? Okay.
Yep.
That's that. That's the game, right? That's the game. That's the game that we play, and we do the same thing over and over and over and over again, right? So if we come here and we look at the dollar yen, okay, that was one somebody wanted to look at. Okay, if we come here, you can see how this got trapped in the range, right? This is a weekly, this is a longer term, but you can see just on this subfit that I have running, look how that pulled back to that weekly support, right? Key level with structure. And you see how that's pushing long on this dollar yen. Here's the daily setup that we put out a long time ago. Look at what it's doing. See that?
Mm-hmm.
That's moving long on this dollar yen. It's going to have its moments. Look at how that pulled back to retest. It pretty much double bottomed in that area, right? But your conviction, and it's tough. I still jump out of trades time to time. Me and Ryan discuss that all the time, right? Ryan is my mindset coach. He's not just you guys' mindset coach. He's mine too, right? So look, right? Look at the pullback that it made and it continued. You have to be strong with your conviction. So if your stop is below the C or your stop is below the A, you have to know I've already calculated that risk, right? So I know I'm not risking more than I can afford to lose, okay? And look at it getting long. As we move down through the smaller waves, we look at the 4, right? And how that's making waves and moving up. That's the daily fib brought down. That was just a cleaner look, right? But you can start to run, right? You see how that pushed down and hit that extension? Look at that. Look how that corrected and moved up,
Mm-hmm.
right? And we should be firing off a new fib there right now. But here's the one off that leg, right? Look how this is moving. It's moving in waves. It's got a lot of momentum. You see how it's making that shallow correction and the bulls are jumping back in, right? So what you have to have are rules. So say this was my initial long and I'm looking to buy. If my rules tell me that I only like to take trades in the 61.8 zone or deeper, okay, then I have to stick to that. If this trade takes off from this 236 and you don't have built in your trade plan, like, oh, I'll take a, see how this is lit up yellow? The smart fib even tells you, right? This is not your zone. This is your zone. But you can have caveats built into your trade plan, like, I typically don't take trades off of 236 or 38.2 because there's a possibility that it may take off and then push deeper. And I don't like that kind of drawdown, right? I don't like that much drawdown. So what I will have is a caveat that says, okay, well, if it's at a 236 and the market has a lot of momentum, especially fundamentally, and I got structure looking left, and say it double bottoms at this level, boom, and it holds, then I'll look to get in, right, off of the double bottom. But I'm not going to put my stop below the A. That puts me upside down on my risk and reward. If I get structure and a double bottom like this, then, for example, something like this, boom, then I'll put my stop right below that double bottom, that price action pattern. Then I'll take it, okay? So you can have caveats built into your trade plan like that. But the reason why we say put it in your trade plan is because the only way you're going to figure out if you have an edge in the market is if you can gather consistent data. How do you know where you're off if your data is not consistent? If your approach to the market is not consistent, you'll never figure it out. You'll never figure this market out like that, right? So you may say, you know what? I don't care. I'm leaving it alone. The only thing I'm trading is this, because what will happen, look, I've got a 236. If my rule is my 80-20 rule is, if it's less than a 382 and it pushes and breaks that B boundary, I might be able to snatch a counter trend trade opportunity. And if I don't want that, that's okay, because then if I'm long dollar yen, I'll just wait for a low price and then I'll buy. And until that happens, I'll just move on to another currency, which is why we don't just stick to trading one or two pairs, right? Because we're taking the same approach no matter what, right? So that's that. So that's where we are on the dollar. It's long. If you're trading from the 1 hour, we don't have a low price established, but overall, we're still in this long play off the daily that we identified off the daily, right? So if you get an established low price like this, like we found, you could trickle trades in. You could put in 0.25%. That might represent one micro to you. That's fine, because if this goes to the D extension, that 1 micro is $138. You're turning pennies into $138, right? But the idea, if I caught my initial entry off this daily, I can go down to the lower time frames. Every time I get pullbacks and corrections, I can add to that position for 1,380 pips long. Any questions on the dollar yen?
Yeah, Benny,
The only one still on here?
I'm not sure.
I'm
I'm just playing. I see it. I see people in the chat.
I'm still up.
I'm just joking. I know I'm going in, but it's important, right? For people to know it, right? Because once you get that framework down, right, the rest is history. The rest is history. It's just a matter of getting your repetitions at that point, right? It's just a matter. Look at Bank of America correcting. Right? That's Bank of America. See? Okay. That's a stop. Right? Same stuff. Same stuff. It's moving in waves, right? The market's running. Can't remember if I put a fib on this last time. Yep, look at that. See how impulsive that is? That tells you the bulls are in control, right? You see the reaction to 80-20 zone, but then the bulls came right back in, right? So we may push, right? The bulls have control. That's Apple. It's moving. But at the end of the day, right? Look at it. It's taking out new highs, all types of stuff. Market is running. Look at that. You don't get the deep corrections, right? When the buyers are in control of the market or the bulls are in control in a particular direction. Right. So that I mean, the Dow, all of this stuff, guys, is the same, is moving in the same way. Here we are on the Dow moving into an 80-20 zone. But look at the last move. Look at the 80-20 correction. AB boundary, shallow retracement, less than a 382, stalled, push right back down. Look at it bounce off that support, weekly and daily support. That's an ABCD move if I ain't never seen one. You see how it hit that target and then it kept running? Look at where the new B boundary formed. It formed once the first high after the D extension, you get the new AB boundary, and then the game starts all over again. Right?
Okay.
So if you wanted to buy, right, this US 30, if you were swing trading this, I wouldn't buy here, right? That's not fair value. Now it may run to the D, that's cool. I have to be willing to pass that up based on my trade plan. But if it pulls back and it corrects into my zone, and my bias is still bullish at that point on the market, then I'll look to get long. And you just sit and just wait. Man. Wait. You sit.
Yep.
You wait. That's it. That's the game. Right? Where's the look at this one to wrap it up. Okay. See, look at the S&P. Okay. 5,000 some people calling next year for the S&P. But look here. Look at the correction. Boom. ABCD. Right? That's an ABCD move. Right? Look. A, B, C, D. Okay. Look at it now. 80-20. So you have to wonder to yourself, what gets the correction? Right? All we do, we up against daily resistance. If you're just playing a support resistance game, that's a daily resistance level. We're in that 80-20 zone. We get a daily and a weekly level. Do we get a correction? Right? First level I'm gonna pay attention to is this one right here. If it comes back down, right? But that would be a monster correction there. Don't know fundamentally what would cause that to happen right now with the momentum that the market has. But we're in a zone where we can see a correction. Okay. Even if we correct it here, that's you're in the money, right? Catching that correction. It's huge. Right. So this is the approach that we take. Ryan, anything to add before we close out, sir?
Man, phenomenal session. Appreciate you breaking the fib down the way that you did. Just a quick catch-up question earlier on the YouTube channel. We haven't heard back from YouTube, so we had to start a whole new channel, guys. So if you haven't subscribed to the YouTube channel, please do. Also, share it. If you know somebody that's looking to gain some information and potentially come join us here in the inner circle, send them the YouTube channel. They can check out the videos that we have. We're continuing to add content to that, just as we were in the past. So information to be there so they can understand what we do and why we do it the way that we do. So they can come join us on this side and be able to get their questions answered and also start to make progress in their journey to become a consistently profitable trader. So that's where we are, starting from scratch, rebuilding, but it's a fun process. And we have a lot in store. I hope you guys are preparing yourselves for what we have coming in the near future.
Appreciate you. Any other questions before we wrap things up? Thanks, Ryan.
No doubt.
All right, that's it. You're welcome, Michelle. All right, well, hey, we spent enough time tonight. But tomorrow, 6:30 a.m. Eastern Standard Time, we'll be right back at it. Show doesn't stop with my awesome partner, Mr. Ryan Carthage. Till then, have a great night, everybody. Great session. Awesome questions.